So I told you guys I was gonna buy Southwest Airlines stock if the price was right. Well, the prices crashed today, so I bought some, and here's the proof. You see, I'm a man of my word. Hey guys, welcome back. So I realize I'm a little late to this game, and I'm sure you guys have already seen a lot of other people make videos about how Warren Buffett is selling US airline stock, and in fact, he sold out all of his position of all US airline stocks. So yeah, today I'm gonna talk about it myself and share some of my thoughts as well. So airline stocks were all obviously all down today because of the news that came out. So I'll put up a screenshot to show you exactly how much each airline is down by, but it's a lot. It's like at least 5% for every single US airline as far as I can tell. And that's partly the reason why I decided to buy Southwest stock today, just because I like to buy into the fear, right? You don't want to buy stock when they're at all-time highs. You want to buy stocks when they're down low. And today I think we've hit maximum fear in terms of the airline industry. I mean, if you just turn on the news, all you see is doom and gloom these days, right? So Jim Cramer went on CNBC saying that, he's very concerned that Warren Buffett is selling US airline stock. And obviously, Warren Buffett selling is a big factor in a lot of other investors' decisions to sell this stock. But here's what I think, though. I think that air travel is pretty much essential. I mean, a lot of people think that people just take planes for vacations, right? Well, that's true as well. But a lot of times people do take them for business-related purposes and just to make a living and stuff like that. So I think that the airline industry as a whole will survive because it's just something that's not going to go away, right? People in the media these days are acting like we're going to go back to like horse and buggy or something, right? They're acting like, oh, if we're here in Canada and we're trying to get to Australia, let's just drive. Well, no, you can't, right? Because there's an ocean in between here and Australia. You have to fly. And I just don't think that the airline industry itself will completely disappear. It's not like people are never going to take a plane ever again. If you expand your viewpoint into like a longer term viewpoint and you think about 5 to 10 years from now, I think that 5 years from now, the situation that we're experiencing right now will be fixed, right? So we'll have a vaccine or we'll have some type of treatment, or at least the outbreak will be over and we won't be locked down in our houses and we won't be in quarantine mode for the next, 5 to 10 years, hopefully, right? So I think that eventually the airline industry will bounce back. And now I know what you're going to say. You're going to say, oh, yeah, I know the airline industry is going to bounce back, but all the companies that you invest in right now, they're all going to go bankrupt, right? And they're all going to not exist 5 to 10 years from now. Well, actually, I don't think that's true. Just because that the airline industry is an industry with a super wide moat. So if you remember what a moat is something that prevents a competitor from coming in and taking your business. So the airline industry has a super wide moat just because it costs a lot to buy the planes and to rent the airport space and to rent the rights to air pathways and stuff like that. So I just don't think that it's very easy for a small company to come in and become a really big airline. So all the big established airlines, even though that they've been hit really hard by this whole pandemic situation, it's going to be really hard for a competitor to come in and take their business. Now, if you don't believe me, you can go and start your own airline business now, right? All the big guys are down, and now's your perfect opportunity for you to come in and start your own airline. Just rent a couple airplanes and just rent an airport space and just start flying, right? Well, obviously, you're probably not going to do that, right? Even when the lockdown is over, you're probably not going to do that just because it'll take too much investment capital. It'll be too hard for you to do so. Now, let me share some of my specific thoughts on Warren Buffett selling the stock. What you got to keep in mind is that Warren Buffett bought into all of these airline stocks back when they were like 30-40% higher in price. So he's suffered a major loss in terms of stock price. And now he's down like 30-40%. And now he's faced with several decisions. He can either continue to bag hold all these stocks that are just, they don't really have any upside potential. In the short term, at least, they're not going to bounce back to where they used to be. So he's stuck holding these airline stocks that are down 30-40% with not a very high chance of bouncing back anytime soon. Or he could try to average down, but he already had a lot of airline stocks before he sold, right? So he owned like close to 10% of all the major US airlines, I think. So especially Delta, and that was one of his biggest positions. And, he's just stuck holding all this stock. And he could average down, but he doesn't want to because he doesn't want to increase his exposure in US airlines. So he can't average down and he doesn't want to continue to bag hold, which means that he's going to sell, right? Which is exactly what he decided to do. Does that mean that you should not buy into airline stocks? Well, I think no. Because I think that Warren Buffett's strategy is going to be different from your strategy and my strategy, right? So keep in mind that Warren Buffett is managing billions and billions of dollars. So his investment strategy is going to be obviously a lot different than yours or mine. Just because that we're dealing with a smaller amount of money. And plus, if we're buying in right now, we're buying at pretty much a bottom in price. Now, I'm not sure if it's going to be the bottom. Now, nobody knows the answer to that question, but it's certainly a bottom. So if you look at the price chart of Southwest Airlines, the point at which I bought in today, which is around $27 per share, is actually the lowest point it's been in, I think, the past 6 years. And it's even lower than what it was back in late March. So if you could believe it, that's what I mean when I say that the airline industry has hit peak fear, just because that the price has hit pretty much a 6-year low. And this is why I decided to buy in today. Now, as to why I bought Southwest specifically as opposed to any other airline, I made a video, which you can check out here, on why I love Southwest Airlines stock and why I think that it's the best US airline out of all the options. So be sure to check out that video if you haven't already. Now, I also made a spreadsheet comparison between Southwest and all the other major US airlines, which I'll put up in like 30 seconds. But before I do that, I just want to say that I think during these times, that's when wealth is made, when the market has hit peak fear, and that's when I buy in. And if I'm right, and if there is a lot of upside in the airline industry, and the airline industry does recover, and Southwest is, let's say, one of the ones that lead the recovery, then I think that there's potentially a lot of money to be made in these situations. And once again, I'm a long-term investor, so in the short term, I expect Southwest Airlines to actually go down even more. And I wouldn't be surprised at all if the stock hits the teens. But you know what? I'm in it for the long term, and I'm not really interested in these short-term day trades and these short-term little price gains. I'm in it for, the 5-10 years out. But anyways, yeah, I'm gonna put up the comparison video, so enjoy that. Hey guys, what's up? So as you can see, I made an airline balance sheet spreadsheet. So I listed all the airline names on the top over here, and then I put in their tickers. So let's go through some of the metrics that we see here on the airlines, and then let's go through some of the things that are interesting. So first of all, I listed the trailing PE. And now usually I'm looking for a low trailing PE when it comes to investing in a company, because a lower trailing PE indicates a better value. But in this case, I actually want to see a higher trailing PE. And the reason for that is because a higher trailing PE just indicates that Wall Street has more confidence in this company. So that's why the Wall Street is valuing this company a little higher. So as you can see, something like an American Airlines, they're trading at what I like to call bankruptcy PE ratios. Now, I'm not going to say whether or not they're actually going to go bankrupt, because I don't want to get sued. But, according to the PE, it's not looking good for American Airlines, because Wall Street is not really valuing them very highly. Now, if you look at something like Southwest Airlines, their PE is actually closer to 9. Now, this is a good sign, because I think that a high trailing PE at this point just means that Wall Street sort of expects the airline to sort of recover and come back to where it used to be. Now, of course, an 8 PE is still pretty low in terms of the grand scheme of things. If you compare tech companies, their trailing PEs are, sometimes they're 50, 60, sometimes they're over 100. So PE ratio of under 10, if you know anything about PEs, is still very low. But all in all, I think that it's a good sign and a bonus for Southwest, and that's why I chose Southwest as my investment. Now let's move on to revenue. So as you can see, revenue, Southwest actually is a smaller airline in terms of revenue compared to some of the other airlines. Now, as you can see, Southwest Airlines actually has a lower revenue in comparison to some of the other airlines, and their revenue comes in at about $22 billion versus it's about double for all the other airlines. Now, of course, these numbers are in thousands, so I don't want you guys to get confused because you're seeing, it's only 22 million, what the heck. These are actually in thousands. I just eliminate all the zeros on the end just because it'll get too complicated and it'll get too crowded if I include all the zeros. So these numbers are in thousands. Just keep that in mind. And so as you can see, gross margin. So for gross margin is just the revenue minus the cost of revenue, and you get the gross profit. And then gross margin is just the percentage of your gross profit as a percentage of the revenue. So as you can see, Southwest Airlines actually has one of the higher gross margins, which is a good sign. Now, moving on to current ratio. As you can see, they're all pretty bad. Usually you want to see current ratios of above 1.5, which if you guys don't know what a current ratio is, it's just the amount of current liabilities and compared to current assets. So it's actually the other way around, current assets compared to current liabilities. So a higher current ratio just indicates that the company is able to use its current assets to pay off all of its current liabilities, all of its current debts that are coming due soon within a year. Now you'd really want to see current ratio to be above 1 just because you want to see that the company is able to pay back all their liabilities that are coming due soon. But as you can see, the airline industry is typically a high debt industry, so the current ratios aren't that great. If you're comparing current ratios and you're investing in a company because of its current ratio, you really shouldn't be looking at any airlines at all. I mean, if you're looking for a good current ratio in this industry, you should just move along because this is not an industry where you're going to get good current ratios. But in terms of bad current ratios, as you can see, they're all below 1. But Southwest still has the best current ratio, all things considered. Now, looking at something like total cash and long-term debts, I think this is where Southwest shines in comparison to other companies. Just because if you look at the long-term debt, Southwest actually has $1.85 billion in long-term debt versus something like, let's say, an American Airlines, which has $21 billion of long-term debt. Now, if I was an American Airlines shareholder, I would be pretty scared right now, just because, especially if you look at the amount of cash that they only have $3.58 billion of cash as per their latest report, and they have over $21 billion of long-term debt. Versus if you look at Southwest Airlines, they're much smaller airlines in terms of revenue, but they actually have a lot more cash comparison to American Airlines, and they have a lot less long-term debt in comparison to American Airlines and in comparison to all the other airlines too. So as you can see that the debt situation is probably the best in Southwest compared to any other major U.S. airline, and this is a really good sign for me. And for me, the risk to reward ratio is just the best in Southwest. Now, of course, if you look at a stock chart of American Airlines, they're down a lot more than Southwest, and this is probably partly the reason why, is because of that huge debt load. And as you can see, I highlighted this in red and I highlighted this in green just to illustrate the difference. And lastly, I just want to mention the dividend and the payout ratio. I don't want this video to get too long, so this will be the last thing that I mentioned. But as you can see, Southwest is the only major US airline that's still paying a dividend. And now their dividend yield is not the highest in the world, it's only 2.46%. But as you can see, their payout ratio is relatively low as well. So all in all, I do think that the best risk to reward ratio is with Southwest Airlines, and that will be a stock that I'll continue to watch. And I've taken on a small position today, as I mentioned earlier. And yeah, it will be a stock that I will continue to watch and continue to maybe average down even if the stock price goes any lower. Anyways, hope you guys enjoyed that comparison. I'm going to leave the video here because it's getting a little long. So be sure to hit the like button if you enjoyed the video, and be sure to subscribe if you like the series. As always, be sure to follow me on Twitter and Instagram. I'll leave the links down below in the description. And with that being said, I'll see you guys in the next video. Bye-bye.